All right, guys. So the job numbers are coming in, and they're giving the Fed more narrative to say that they haven't met their goals and they can keep raising rates, and the market's going along with it. And so they're starting to roll over, and interest rates are being sold as well. The bonds in the Treasury market are being sold as well. So, what does that all mean? Well, I don't think anything has changed. I think we've been over the top of this thing for weeks and months now, and I think the market is just getting tossed around like a ship at sea. And I don't think that they have the foresight to think that far in advance. They're just getting tossed around by narrative, especially these algorithms that are programmed to trade in the market. So, look, guys, what I think is that we are still on track to see lower lows in the broad markets. I don't care which index it is. We're going lower. Again, it'd be nice to see something like 3,400 on the S&P to start considering a bottom. But we got to get at least that far, I think. And it could take some time to get there, but I believe we're going to get there either way. In the case of the metals, gold and silver, I will tell you this much, guys. I had put out a tweet saying that 2145 was the number to beat. You can see where we got to 2133. So we were just under that. And the reason being because if you look at the weekly chart, I posted this on Twitter for you guys. We have a triple confluence of resistance right there. And so that's the number to beat. Now, all these people have all these, numbers, but this is the one to beat. 2145. You get over that, and you're going to be in pretty good shape in silver. Now, I'll tell you, as we get the weekly close, that is a long upper wick, okay? But on the daily, you had a nice ramp in volume to break up above this key resistance level, and you hit the next resistance above, and you're kind of consolidating downwards. I don't think anything is wrong with this. I think everything still looks good. In the near term, you want to hold, call it 1950, okay? Because on the daily, on the short-term time frame, that gives you a double confluence of support right here on this trend and the 50, okay? You come back out on the weekly, and that'll let you close above this trend line as well. So that's what you're looking for in silver and the spot price in the future. So moving over to gold, I'm going to come back out to the monthly. And remember, I was predicting this for a long time that if we broke this trend line, we would get a peekaboo, which is a failed breakout, right? It just comes out and says peekaboo, and it goes right back, and it got back into trend. That's our call. We called it. We got it right. And it looks like we are on track to get another monthly closing day here above the 50 on the monthly. When we zoom into the weekly, we're going to get the close above the 200. And on the daily, we're going to chill just under that 50. So in the case of gold, I think everything still looks good too. It's not impossible to break down under this trend line again, but the key now is not to make new lows, okay? If this was a pivot, if this was a turning point, we can't make new lows, okay? So that means you can tie with it, you could come down and retest it, but you can't break it. You can't make a new low, all right? Because if we do, from this point, then we have a good idea where we're going, and that's going to be about 1550, okay? But beyond that, if we don't make a new low, all right, and we come rebound on this trend line or something like that, then it's off to the races. I mean, that was the low, in all likelihood, and you simply have to hold. Just hold now because we're on the way. Like AMD is something I'm tracking for the long term. Once we finally get to the bottom of this thing, it's one of the companies I want to buy back into. And I've been waiting for a long time for us to come down and test 58.44. That's a very strong horizontal level of support. And we finished the week on it. And, I didn't take the trade, but when we got to this support, I told you guys that it would be a good potential shot at a nice rally there. And that's exactly what we got. We rallied all the way back up. Well, now we've fallen back down to the next one. And even though we're here and I'm looking at it and have been waiting for it, I'm not so sure that I can take it. It feels pretty risky. I just don't like the way things look. It just feels bad, and it feels like we have lower to go. And I will tell you, in the case of something like NVIDIA, you can see that it's hanging on to kind of critical support of its own right now at the same time. But look what is between NVIDIA and the next level of support. Nothing. This is dead air all the way down to its next level of support. 38% lower, guys. 38% lower. That's a lot. If we were to try to find something on AMD, it's kind of the same because it really doesn't have anything in this kind of choppy ascent here. But we can sniff out a couple of things like maybe this one right here. And that happens to be 39%. So that would line up with NVIDIA. And so what I'm going to do is be patient. And I'm going to put in a new horizontal support of where I'm looking to buy back into AMD for the long term of about 36 bucks. All right. And then by the time we get down here, we'll see what it actually looks like and see if it's time to get in or not. But the way it's going, this is just one more element that suggests we're at another good spot for a rebound or a rally, but probably still not at a good spot to buy. Okay, guys, time to get into silver gold equities. We're going to start with the ETFs, SIL. Again, on the weekly time frame here, you can see this big fat upper wick. Nothing's broken on the RSI. And in and of itself, this doesn't look too good. But if we zoom into the daily, we have some positive signs. So first of all, this is the first time we've managed to break the 50 on the daily. And, we've closed above it several times. We're now testing today. So when you zoom in and take a closer look, it actually is very encouraging to see. Okay, so can we hold it? Well, certainly we hope so, right? But it looks better than it really is, or excuse me, it's better than it looks on the weekly when you zoom in and kind of see what's happening in the short term. So let's hold that 50 and continue to go up. Same thing is true on SILJ. All right, so obviously now we want to hold this 50. We want to hold our breakout zone of this descending trend line here. And if we can do that, that would be very encouraging. Something else that's very good in confluence across the sector is nothing is broken on the RSI. There are no negative kind of patterns. Everything looks pretty good. The GDX was getting denied here at the top of our buy box here, and that's okay. We'll have to see what it does next. Let's zoom out on the weekly and give you a shot of that. See, it doesn't look as good as the others. That is true. But it doesn't look awful yet. We just have to see what happens next. I will tell you that, as long as we're in the zone, this is a solid zone to buy. And so if we do manage to come back down all the way to $21, $20, it's going to be even more of a buy then than it was this last time. All right, and let me show you why. First of all, look at where we are on the RSI, and then look at where we are in breadth. To come all the way back down now, it's just going to be a stronger buy, guys. And I'm reminding you of the confluence that we have from now to here to here. I mean, look at the price action back then. I mean, look at what happened back here. We didn't just go blow straight through resistances. We struggled with them for several weeks before we went up. And so don't get discouraged by this stuff. I think these historical analogs are going to help us quite a bit to navigate this whole thing. So for now, just sit tight, hang on, looks fine. GDXJ, again, a pretty ugly upper wick there, failing to break out above this pattern. And it's resting on key support right there, like everything else is. It does have a net bearish downside look to it, but as we go through silver looks pretty good. Okay, so in the case of something like AG, we've managed to break out on ascending volume. Okay, roughly sniffed out the 200, came back down, and we've got pretty strong triple confluence of support here now. Not only our breakout neckline, but the 20-year trend with the 50. So as long as you hold these areas, that would be quite good. So that's your near-term outlook to see if we can hold, call it 786 at the bare minimum. Okay, and again, look, can I just remind you of this run back here, or even this run, 2015. Guys, because I see a lot of people upset about the price action today, and it's down 5%, 8%. And I have to remind you that even in 2015, when we had this huge run, okay, so peak to trough, that was 657%. All right, we'll call it 680%. In 204 days? Pretty good run, right? But it didn't just go straight up. I mean, you had lots of periods in here with sharp sell-offs, right? So here's one right here. There's 3 days of selling that was worth 16%. Here's another one right here. Here's a 20-day span of 14% selling. And if you had sold at any of these moments, you would have lost out. I mean, look what it did, okay, until it ultimately peaked. We've only just now started on this run. So you need to not be shaken. You gotta hold on to this bull, man, because it's gonna try to buck you off. I mean, the markets will always try to buck you out. It's not gonna make it easy. You just have to. It's like Peter Lynch says, right? He says you got to know what you own and why you own it. And we own these silver and gold miners because they mine silver and gold, right? We want leverage to the underlying because we know the underlying has massive leverage itself to all these crises that are unfolding, right? Whether it's the sovereign debt crisis or the energy crisis, all these political morons making all the worst decisions at all the worst times. I mean, we know things are going to get worse. The macro situation is going to continue to break down. And so what we're doing is buying leverage to the insurance that's going to, be there for everyone as this all unfolds. And so when you understand that in your mind and also appreciate that not only is all of this true, but the equities that we're buying are historically oversold as well. Historically oversold to key moments in time with the same kind of confluence that all saw massive run-ups in the past. And nothing in the past was as big as what we're getting today. So it stands to reason that as you come to the apex of a chart like AG, that the breakout will be to the upside, and the upside will be tremendous, right? So just be patient, continue to accumulate. That's what I'm doing. I think all these equities look great. We'll keep looking at them. But look, I'll say it again. Unless you get that sharp liquidity event type sell-off, I think the bottom was already in, okay? So I still have my green flag to accumulate gold and silver equities with the strategy of saving some cash in the event of a sell-off. And how much cash you save depends on you, your risk aversity. If you really just have trouble riding red, even if it's for a week or two, then save most of your cash and see if you get that sell-off. But the thing is you might not. And so this is why we did all this accumulation in here, preparing for this potential breakout, right? Which is still unfolding, so we'll see how it goes. Something like Pan American. Okay, so look, you had this kind of a double bottom pattern right here, right? And what's it doing? It's kind of resting on the top. And so you failed to meet your measured move. Or did you? 1650? Yeah, I mean, you fell a little short of the measured move. But when you're coming down, you're resting on this trend line, at least so far. So for Pan American, you'd really like to see it hold 1640. If you start to break down, likely it's a signal that we're coming back down, at least down here, if not back to that $14 range. So if you missed it the first time, that will be perhaps your final opportunity to get in. Again, any short-term price action in these markets that take you back to the downside has to be bought with confidence, okay? Understanding the long-term outlook of what's going on here. Agnico Eagle, again, looks just fine. Pretty nasty red day, but the technicals all look fine. There's nothing broken in the RSI. There's no reverse indicators, anything like that. Nothing looks bad. It all looks fine. Let's zoom out on the weekly. So again, you have this kind of ugly candle here. That's true. But you could easily step over the next day and run up the rest of this way on the W pattern. Maybe. We'll see. But again, there's nothing broken on the RSI. So far, so good. Look, again, the markets are just getting drug around based on the pivot or lack thereof. And so the last 2 weeks are really a testament of how fast the gold and silver space is going to move when the Fed pivots. I mean, you just got rumors of it, and this is, we were up, most of these equities were up 30-40%. Agnico Eagle was up 25% by itself. It's a major, but First Majestic is up 40%. It's still up 30%. And so, and that's in 2 weeks, guys. 2 weeks, 40% in 2 weeks. Do you understand? I mean, that's a lot, dude. 40% in 2 weeks. We're still up 30%. So that's a sign that just goes show you how fast these markets are going to move once the conviction is really in. I do think that this was the bottom. I do think that was the pivot. But for now, we just have to get at least one more week. I think next week's candle is going to be really nice. And again, if you can come down and test these levels like this and get a rebound, not set lower lows, stay up here, that's going to be a really good sign and a clear indication that we're off to the races. You know, it's not just going to go straight up. You're going to have these sell-offs too. So keep that all in perspective, guys. Nothing has changed about any of this. Gold and silver look great. By the way, guys, gold and silver doesn't even need the Fed pivot to work. It'll be a major catalyst for sure, but the secular bear market will do a lot of the work for us. And you have to appreciate the fear trade. I mean, you just look now that Bloomberg is telling you if you're in Europe, get used to lunchtime power cuts, shorter showers, and darker streets this winter. I mean, the front page of Drudge is, you know, Armageddon, blah, blah, blah. And just as a reminder to you guys, let me show you something. The last time we had a big move in the gold price, okay, so that was, let's see, here. This move right here corresponded with the Ukraine invasion. That got us back to all-time highs. Has nothing to do with the Fed. Had nothing to do with interest rates. It was fear. It was uncertainty. Okay, so don't think that the Fed pivot is necessary for gold and silver to turn around and make all-time highs. All right, I want to make that correction, guys, because if you're one of these people who are waiting for some kind of signal to get into gold and silver, you may miss the boat. And I'm not trying to get you to FOMO. I have a clear strategy for this and what to do, and you can take it or leave it. But understand this fundamental fact is that there are several catalysts out there, not named the Fed, that could catapult gold and silver to the next level, okay, by themselves. Secular bear market, geopolitical turmoil, development in the energy crisis, breakage of a foreign sovereign. There's lots of things that could happen. So don't put all your eggs into the basket of the Fed. Well, my blessed, beloved brethren in the uranium space, I got to come to you the way I always do, which is to shoot you straight. You know, I never shill you on anything. I just give you my honest opinion about what I see in the charts, when to buy, when to sell. And I just want to point out exactly that. So at first glance, you will see that we might be resting on this double confluence of support here. And if we switch to URNM, we see the same thing. So we had this inverse head and shoulders. We broke above it, failed, and now have managed to get back above it and are now resting on that very same neckline. Well, the problem with this is that out of this inverse head and shoulders, you are now potentially forming a new head and shoulders. And so as you can see here, we have a left shoulder, head, and right shoulder, which doesn't exist yet. It still has to play out. But I want to put this into perspective for you as something that could potentially happen here, because it's a pretty healthy pattern with a pretty clear neckline of its own, and you see this in confluence across the board, across the space. And you guys know, especially you who have been here for a long time, know that I always say uranium really likes to share its hand, right? It's a very easy read on a technical basis. That's what makes it so easy to know when we have the bottoms and the tops, okay? And we call them pretty much every single one of them here on this channel. And part of that is because the sector trades in confluence with itself, meaning all of these charts, they all look roughly the same. And that makes it very easy to sniff out the support and the resistance in the buys and the sells. Well, I can tell you that as we go through these charts, they all look the same. So let's just come to NXE, for example. I mean, you have a shoulder, a head, and a potential shoulder. And so what might be a good thing for next gen to consolidate for a minute to gain strength for a breakthrough? Well, what if it just puts in another shoulder before the breakdown, okay? And this is something we're starting to see develop across the space. Again, URNM, we have shoulder, head, potential shoulder, maybe rally sideways a couple of days, lose the neckline again, and you have a perfect brand new neckline at about 6150, 6140 for the new head and shoulders. And then look, if you lose that, guys, if you lose that, at bare minimum, you're coming all the way back to this trend line. That's another 20, 22, 23% down from here, right? So that is not insignificant. That's a long way to go. All right. And so suffice this to say, there is still no way you can be buying uranium now because there are no buy signals. In fact, you have the potential here. You are in the process of developing very powerful sell signals. So you have to continue to wait to see what happens. As a matter of fact, in the last video or two, I told you guys that in the uranium space, because it likes to trade so closely with the broad markets, that if and when the broad markets got this rally that we've just got, that you should use that as an opportunity to consider selling again if you miss the obvious opportunity to sell here, right? And you may be losing that opportunity here as it begins to roll over, because I can tell you right now, there's really nothing good about the broad markets, and they're probably going a lot lower. And because of uranium's tendency to trade with the broad markets, it stands to reason that it's going lower too. And you also have to consider something, guys. The problem with uranium is that it has too many bullish things as a tailwind. I mean, really, that is a problem for it. And if you ask, well, what does that mean? How could that be a bad thing? Well, the reason is because it has so many. It's like, what's left? What catalyst could be left for uranium to let it break free? And the answer is that there are very few. You've already gotten most of them behind you at your back. And so you could say, well, yeah, what about contracting? Yeah, sure. That stuff is still left out there. That's still part of the thesis. But, you know, that's just kind of out there floating in the ether, right? And what happens if that contracting is not as good as you expect, right? I mean, you just don't know. But things like that are far and few between compared to how many you already know and how many you already have, right? So the point is that you've already used a lot of your ammunition and you still can't break free from the broad markets, right? And so it really takes the wind out of the sails of the concept that you're really going to break free. That's why I think uranium probably won't break free until we get this liquidity event, until we get this sell-off, until the S&P can come down and make lower lows, if not, you know, its permanent lows, wherever those are. At that point, you know, maybe we sell off another 20%, come back to this trend line, and maybe that's the next great buying opportunity that takes us back to the top of the trend line again. Very well could be. But you know what's not a good idea? Buying uranium right now, right? If anything, you really want to sell if you never sold, especially if you bought with us back here and you're still sitting up on all those gains and you haven't taken any. I mean, dude, you missed out on so much already not selling here, right? And these were clear sell signals. So you really got to ask yourself what you're doing. I mean, why would you want to sit through even more selling on purpose? You know, it just doesn't make a whole lot of sense to me. But again, you see the confluence across the board. Okay, so we have shoulder, head, shoulder, potentially, right? Let it trade for a couple days. You come down, and then look, you're going to come down at least something like this, if not something like this. I mean, you got a lot further to go. We can measure that for you. Take a peek of where it might go. So from where we are today, I mean, that's another 35%, you know, maybe 44% in the case of energy fuels. I mean, the measured move would be pretty big. I don't know if you'd actually get the measured move. So that's peak to trough, okay? That's $2.65. So $2.65 from wherever you break through the neckline, say it's right here, you know, that puts you down here about $3. I don't know if it gets down that far, but, you know, it's certainly possible. But the trick here, guys, is to pay attention and to see if this pattern starts to develop. If this starts to make a rounded top right here, start coming back down, then the likelihood is going to increase that this is in fact a head and shoulders pattern playing out, especially if you see the broad markets trending downward. So you just need to get over the fact that there's this decoupling in uranium, because there's clearly not. And you need to let the charts talk to you, because they're trying to talk to you right now. So for right now, you cannot buy uranium. You still cannot buy uranium. It would still be my advice to you know, trim at least, especially if you haven't, and you're up big. I mean, why not? I mean, if you look at stuff like LEU, look at this. Look at this. So this is on the daily. So look. LEU is an equity that really does not trade in confluence with the rest of the sector, in so much as it makes its own patterns, okay? It doesn't make the same. Now it's putting in a head and shoulders also. Sorry, I got my allergies. So you clearly have this shoulder, head, and shoulder forming out in confluence with the rest of the sector. And this, I have to say, is pretty rare to see LEU do this. So that's kind of a big deal, guys. That's a big deal to see that. And so just as a reminder, I told you to sell up here. I also told you if you wanted to buy, it would be right here. And I told you this up here. When I told you to sell, I told you when you could buy it back in. And when we came down here, I said, look, if you did buy this, and I told you on this day right here, I think, I said, if you did buy this, then if it continues to rally up, you're going to want to sell it because it's probably coming back down, right? And then look what has happened. You're coming back down. And it wouldn't surprise me, not in the slightest, not in the least, if LEU were to get this head and shoulders and fall back as far as, $30 at least. That is a long ways away, guys. So when you see this kind of confluence, you really have to listen. I mean, Global Atomic, we'll take a peek here. Clear neckline on the same head and shoulders. The right shoulder's a little tight, but so what? It is a shoulder that's in the process of developing. It could do the same thing and break, And maybe you come all the way back down here. How much would that be? Another 25%. That makes sense. So I will just reiterate, you cannot be buying uranium right now. SLX Silex, I've been pounding the table on this one for a long time too, since way back here. I told you we had moved to break to the upside on the daily, but on the weekly we were going down. And I tried to get you guys to sell. I had some people hazing me about it in the comments, and their comments are not aging well because we have sold off substantially. Now down 31% since the top, as down as far as 37, with a lot further to go. In fact, if you come to the weekly, I have been trying to tell you for so long that we were going to come down and touch that 50, and we still have another 25% to go right there, okay? And you cannot buy Silex. You cannot buy Silex until you do one of two things, and that's touch this 50 or touch this horizontal. It'd be better if you came down to touch this major trend line here. Okay, that's at $1.50, but by the time you got there, it might be up here anyway. So call it $1.80 would be a great place to think about Silex, but no lower or no higher than 214. I mean, you have to touch this 50 on the weekly. You have to do it. This was major overbought, guys. And it was so obvious, it's so clear. When you get something break away that far for that long, okay, and then you start getting these upper wicks, you start getting the divergence. I mean, it's a sell signal. That's a topping signal. So you can't touch this for a while, even despite how much it's sold, okay? Even despite this 30, 40% sell-off, it's still overbought. It's still overextended, so it still has more selling to do, okay? And so the sector, by and large, as a whole, in unison with itself and confluence is, it's threatening to go down, okay? So we're looking at Paladin on the weekly, struggling to get back above that horizontal, okay? And look, you got the same potential head and shoulders pattern coming in right here, all right? So, chop around down here, come down and you break down. That would give you another 30% downside. So that's in confluence with the rest of the sector of what we're seeing. So I just think that you should expect that. I think if you want to get in uranium, you have to wait to see this pattern develop first. If it does, because it might not. See if it does. And if it does, let it play out and be patient enough to wait to buy it when it's significantly oversold. Hopefully, ideally, on these lower trend lines in these major channels. But otherwise, we're going to keep looking at it, and we'll take, a peek at it on a weekly basis, and we'll figure it out. I mean, we'll identify the buy signal when it comes. But as of right now, it doesn't exist.